Hi, and welcome to Chapter 3. Here we're going to talk about investment information and securities transactions. These are our learning goals for the chapter. We're going to discuss the growth of online investing, pros and cons of using the internet as an investment tool. We're going to identify major types and sources of investment information. We're going to explain key aspects of stocks and bonds, market averages and indexes. We're going to review stockbrokers, their roles, services, brokerages, opening an account, look at different types of orders, discuss roles of investment advisors and investment clubs. So let's get right to it, and let's talk about investment research. So if you're getting started with investments, there are plenty of websites where you can get some investor education, supplemental to this course, of course. Sites like Yahoo Finance, there's even Google Finance, The Motley Fool, InvestorGuide.com. These are sites that offer lots of tutorials, classes, and articles about educating yourself as an investor. There's also investment tools that you can get in research as far as developing investment plans, investment goals, using a stock screener, plotting charts, obtaining stock quotes, things of this nature can all be easily done online. Okay, just resizing this a bit. Okay, so let's go. These are just a couple of different stock screeners. I'm going to go and say, yeah, Yahoo Finance is sort of a typical website where you can get a lot of information, and you can get an idea of the news and the current events, what the stock market indices are doing, all on the first page. You can get information on, let's see, I want to go, they typically have a stock section you can go to, so we're going to go to, let's see, market data. And here they'll have more information on the markets, different stocks, most traded currencies. You can go to the stock area. And here they'll give specifics on the world indices, the market movers, percent gainers, losers, trading. And you can even go, into a stock. They'll get a lot of information or review of the stocks, everything that you're interested in. If we just go to their finance home. They have, let's see, the different Yahoo originals that are sort of like educational about stocks and that nature, personal finance, taxes, calculators, market data, economic company news. You can create a portfolio within Yahoo Finance. We can go to calculators and give you quick calculators to calculate your spending, your savings, your retirement, your mortgage. So Yahoo Finance is a good example of a website that'll have a lot of investing tools on the internet. And there are tons of these websites. I just think Yahoo is a good website that sort of encapsulates everything. And they make it easier for you to do research, to get investor information. Now, a lot of the information you get on the internet, it's all, you got to be skeptical of a lot of it, especially if it's advice-oriented, trying to encourage you to buy or sell a stock. And you need to know who the advice is coming from and how reputable they are. But there's generally a lot of information and investment tools on the internet. And the two types of information basically on the internet are descriptive and analytical. So descriptive is going to be factual, just the facts, the market, the economy, the numbers. Analytical is going to be more judgment and more analysis and more editorial about how people feel about these descriptive information and what they may mean for the economy or the potential of investments. So you have to really know that these are two pools here. The descriptive generally is correct, and there's usually not much manipulation in descriptive information, but analytical information can be really, sometimes they can be swaying you to what they want you to do rather than what's best for you. So you got to be careful of that. As far as financial reports, many different websites will contain or display financial reports. If you want to have financial reports, you can go to the company's webpage, and they usually have something called investor they will have some investor relations. So if we say go to McDonald's corporate page, and there'll usually be a, let's see, there's usually an investor relations, maybe it could be on their corporate page. Investors. Okay, here, so investors, you get the company profile, shareholder information, and they usually have the annual reports as well. So any company's stock, any company page of a public company, they'll be able to get, and you can go back to 2000 annual report for McDonald's or any company you want to look up. There's also plenty of other websites that will sort of group together annual reports, and plenty of tools to get this descriptive information on companies. So investment information, we want to look for, economic and current events. That's going to have a lot to do with influencing stocks. Industry and company-specific news, which you can get, again, Yahoo Finance is a good way of, besides the, if you go to the individual companies page, they'll have shareholder information, stock information, news releases, and things of that nature. In the newsroom, they'll have different news releases about the company. If we go to Yahoo Finance and you look up any particular company, that they will have headlines and news on the company right below the stock quote. That can give you a lot of information about the company as well. On the internet, you can information about different types of investments, pricing information, sort of exactly what Yahoo is giving us right now here, as far as the bid and ask, and this is the price of the stock. Personal investment strategies, things you can do, and the source of investment information, of course, financial journals, Wall Street Journal, Barron's, Investors Business Daily are very useful. Useful information. They have, of course, print newspapers and websites you can go to. New York Times is good. Bloomberg websites are good. CNN Money is good. Other PR articles like Fortune, Forbes, Business Week, Money, Worth, those are all good publications to talk about investments and finance and things like that. The government will produce reports on economic reports, unemployment, inflation, GDP. So things like this are good for getting more. The more you know, the better investor you are. So the more that you research, you understand, you read, the more broader your knowledge is in the overall financial markets and companies, the more easily you'll be able to see the bigger picture and have a better idea of what to buy and sell. Of course, company information you can get, again, from the Wall Street Journal, Fortune, Business Week, company-specific websites. Regulation FD is fair disclosure, means that any information a company releases has to be released publicly and at the same time. And so, company websites, like I showed you at McDonald's, will give you these shareholder reports, 10Ks, 10Qs. You can go to freeedgar.com, which is another website that which backs up all the SEC information that's free to know. So if we go to freeedgars.com, the site looks like this. It's not the most exciting site, and you can get a bunch of reports, information. You just have to go to search on the company, and they'll give you a list of a lot of reports and filings that Microsoft has done. So that's just an example of information you can get easily on the internet. Hoover's online or Hoovers.com. If you use it from a sync site or use it through a computer through the campus network, we have an enhanced subscription service that was paid to give you a deeper level of service than just a general free account for students. And they have Hoover's online is a great website. I use it all the time to get more in-depth information and in-depth research and components I need to know from a company source. And they give you analytical and downloadable spreadsheets of income statements and balance sheets. A great website. I highly recommend it. Of course, Yahoo Finance that we went over. MarketWatch is actually a website we use. We work with, and we use that for our stock trading game. So let's just go to marketwatch.com, and this is the website where we have a lot of financial information and news, sort of like a Yahoo. And of course, this is where we signed up, and we have our stock trading games in this. I'm not signed in right now, but we went over this before where we joined, and this is currently where we're trading our fictitious companies. So these are 4 great websites for information and the whole thing is, if you want to be successful in working in investments or trading stocks on your own, the more you know about a company, the economic environment, the past history of how companies have performed, the more successful trader you will be. And that's why a lot of traders aren't so successful the first 5 years, but once you sort of get to a critical point of knowledge, you start being able to see the forest for the trees and putting all this stuff together. All right. Now, Dun & Bradstreet, Standard & Poor's, these are all the other additional services that give you company information. Investment letters, which are sort of experts who create their own sort of website or letter that you have to subscribe to. Brokerage reports, where brokerages release research to, basically you have to pay for these, but the brokerages will put together research and issue reports to investors or clients. As far as price information, trying to find quotes, buy and sell quotes, that's going to be best done, of course, on Yahoo Finance. MarketWatch will do it as well. So Yahoo Finance is an area where you can get stock quotes very easily. And not only just stock quotes, you can also get option quotes on stocks here, historical prices on where the stock has been. So a lot that you can do here in Yahoo Finance. These are now all publicly traded stocks also have a stock symbol. So it's important to know the stock symbol so you can easily get the price and company information for the stock. Now, of course, there are other sites you can go to get investment information. There are plenty of mutual fund sites, bond sites, international sites, investment forums. These are all easily looked up. A very good investment forum that I like to sort of use, RagingBull.com and the RagingBull.com. This is Raging Bull, and it's just a message board where they talk about companies, and you can see what the web buzz is and spotlights, and you can click into a company, the coffee shop, and they'll talk about, click into different little postings that investors have made on this stock and what they're talking about. So it's sort of like a glorified message board, bulletin board, to get more information. Now, you want to avoid online scams. So there's a lot of false news manipulation, especially in these message boards where people are trying to encourage you to buy or sell stocks that really isn't in your best interest. So you have to buyer beware, sort of. So you don't want to follow people's advice, automatically just follow what they say, or any advice they have on buying or selling stocks, because they have these pump and dump schemes where they try to pump up the stock, and they'll have 16 different accounts, and they'll all post as a different person on the message board, really trying to sell the stock and get you to buy to push the price up, and then they dump it and make a profit and leave you holding the bag. Anything that seems like a get-rich-quick scheme, they're promoting something or a stock that you really don't understand or it doesn't make sense, but somehow there's a big hype around it. And these are things people taking advantage of you. So you got to be careful of these online scams and things that they're going to ask you to pay money for that really aren't valuable. So you want to ask yourself these questions to protect yourself. So anybody selling you anything, are they licensed? Is the investment registered? How the risks compare to the rewards? Do you understand what the investment is and how it makes money and how they work? If you can't understand it, don't invest in it. And where can you turn for help? If there's Better Business Bureau, there are different areas where you can kind of look for help to figure out whether or not this is a good business potential investment. Now, to understand the history of the idea of markets and stock markets and where they're going and how they're progressing or increasing or decreasing, we use these interested in market averages and indexes to gauge the market conditions, to get an idea of the portfolio performance, look at study the market cycles and the market behavior. And these averages, we have an average like the Dow Jones Industrial Average, which reflects the arithmetic average price behavior at a given point and using just a simple averaging. And we have an index which measures the current price behavior relative to a base set. And the indexes are more reflective of the actual dollars of wealth being created, where the averages are not so as reflective. Now, the Dow Jones Industrial Average is just 30 stocks. And they also have a transport average, which is just 20 stocks. And they have a utility average, which is 15 stocks. The S&P 500 is 500 of the largest stocks that change periodically, but it's supposed to be a good representation of the Fortune 500. And we can have an index on the New York Stock Exchange, the American Exchange, the NASDAQ Exchange. They all have indexes based on stocks within the exchange. We have Value Line composite indexes made by the company Value Line Company. We have the Wilshire 5000, which is 5,000 stocks traded on all different exchanges. The Russell 100, which is the 100 largest companies. The Russell 2000, I'm sorry, I meant Russell 1000, 1,000 largest companies. The Russell 2000, the 2,000 smallest companies. And we have the EAFE index that looks at Europe, Asia, Far East. So all these different ways to look at performance. So the Dow Jones Industrial Average, this is the from 2010 to 2012. We can look at the S&P versus the Dow Jones, and you can see how they actually are trading in a pretty similar pattern. They do move up and down, and they share a lot of the common stocks as well, so that could express the high correlation of the two. Now, bond markets have their own indicators that will list bond yields for corporate municipals, junk or high yield bonds. So bond markets also have their indicators of price. There's a price at which you buy and sell a bond, and there's also the yield at which the bond is currently trading at that's related to the price. Now, if you're going to be buying any types of bonds or stocks in the stock market, you're going to need a stockbroker. And that's the stockbroker is the financial intermediary between you, the buyer, and the seller of securities. So you need the stockbroker sort of like a middleman to make the transaction, sort of like a real estate agent that sort of connects the buyer to the seller, and they earn a commission. Now, the stockbrokers have to be licensed by the SEC, and they're going to place the orders, and they're going to connect you to the brokerage firms, because you are not allowed to talk to the brokerage firm directly yourself. You have to have a stockbroker place the orders for you to a brokerage firm who has a seat on the exchanges. Now, the brokerages who basically employ the stockbrokers, and the stockbrokers are the people that bring the orders from you to the brokerage. The brokerage also, they hold all your stocks. They hold your stock certificates in the street name, in their name basically, and they create an account for you that is easily to understand what's in your account, how much money you've made or lost, and just relevant information and reports to organize all of your investments. Now, you can have a full service broker that's going to do everything from you and provide research and advice and hold your hand the whole way, or a discount broker, which will give you lower commissions, but they're going to give you limited research or some or no investment advice, sort of like a Charles Schwab or a Fidelity. Now, a basic discount broker focuses mainly on executing your orders online. So even though you place a stock order online through a discount broker like Scottrade or E-Trade, you're still going through a broker. Even though you're not seeing them face to face, your orders are going to be placed through a broker's name to the brokerage. And you're just basically placing an order, a lot like what you're doing in a stock trading game, and there's no advice, no research, and the commissions are at a huge discount compared. You could be paying in a full service brokerage, you may be paying $50 in commissions. In a discount brokerage, you could be as little as $5 commission. Now, if you're going to select a stockbroker, you got to understand what your investment goals are. And you have to understand the investing style and the goals of your stockbroker, and hopefully they meet up. Now, you have to be prepared to pay a lot of money to these brokers who are going to provide you advice and do a full service on your account. Now, that's why you want to have someone you have good referrals from, friends of yours, or business associations that have a good track record, because these brokers work on commission. So sometimes if they're not in your best interest, they may be churning your account, trading a lot just to generate commission for themselves, but not really trading to create returns for you. So you got to be very skeptical of these stockbrokers. I would say only 1 in 10 are any good. However, if you complete this course and you listen to all these lectures, you should be able to make the investment decisions for yourself quite easily without having to have or pay for a stockbroker. Now, these are just some of the different brokerage sites that you can go to, and I would suggest going to these different brokerage sites and seeing what they have to offer, and just popping on the internet and going to, say, E-Trade. Here's E-Trade, and just seeing they'll have everything they on here about their account, how to open their account, and all sorts of information. You can also go to say Scottrade. It's another location. They actually have physical locations. You can go to different stores, and they'll tell you a lot about investing and different things you can do and competitive pricing. So if we click here, and they'll show you, $7 trades versus $32 brokerage assisted trades, and give you an overview. See online trading. So they have a lot of different. Shows you everything that they have to offer. Go to Fidelity.com. That's a big one, and they'll give you lots of information on stocks and trading, how to get started, and how to open a brokerage account. Any of these brokerages, E-Trade, Scottrade, Fidelity, are all good. Charles Schwab, all perfectly fine to get started with and open up a brokerage account. And opening up a brokerage account is a lot like opening a bank account. And you send them a check, you establish the account, and then you can start buying and selling stocks right in the brokerage account very easily. And everything, brokerage accounts now are evolved. They're like a bank where you can have credit cards and debit cards and checks, and you can pay bills through them, and you can have your payroll check directly deposited to them. So they're a lot like banks now, and you can quite easily operate your whole financial life out of a brokerage account, and not even you really need a bank account if you so chose to. Different types of brokerage accounts. You have a custodial account, which is for minors, which most of you don't need. I'm assuming everyone here is over 18. Cash account, where you're just going to make all your transactions in cash. You can have a margin account or a wrap account. The margin accounts we'll check out in Chapter 2 and explain what those are about. And basically, a margin account allows you to borrow money to leverage your trades. Okay, so we're going to stop here for Part 1, and we'll pick up with the basic types of orders in Part 2 of this lecture that you could see right after this. And please like and comment on this lecture. That'd be much appreciated, and I'll see you next time. Thank you.